Before we begin, this video is for educational purposes only and is not financial advice. Always do your own research before making any investment decisions. There are thousands of ETFs available to European investors. So how do you know which ones are actually worth your money? In this video, I'm going to cut through the noise and show you the best ETFs for beginner investors in Europe in 2026, what they are, why they made the list, and exactly how to buy them. No complicated strategies, no overwhelming lists. Just the best options for someone starting out. Let's get into it. Before we get into the specific ETFs, let's quickly cover what we're actually looking for. Because not all ETFs are created equal, and knowing what makes a good one will help you make better decisions for the rest of your investing life. There are 4 criteria a good beginner ETF needs to meet. First, broad diversification. You want an ETF that spreads your money across hundreds or thousands of companies, across multiple countries and sectors. No concentration in one area. Second, low fees. The TER, total expense ratio, should be under 0.25% per year. Anything higher and fees start meaningfully eating into your returns over the long term. Third, large fund size. A bigger fund, measured in assets under management or AUM, means more stability, better liquidity, and lower risk of the fund being shut down. Look for funds with at least 1 billion euros in AUM. The ones we're covering today are all significantly larger than that. Fourth, UCITS compliant. This is a European regulatory standard that ensures the fund meets strict investor protection rules. Any ETF available on European platforms like Trade Republic will be UCITS compliant, but it's worth knowing what it means. Every ETF on today's list meets all 4 criteria. Let's get into them. The first and most popular choice for European beginner investors is the iShares Core MSCI World UCITS ETF, ticker symbol IWDA. This ETF tracks the MSCI World Index, which covers around 1,100 large and mid-cap companies across 23 developed countries. The US makes up roughly 70% of the index, followed by Japan, the UK, France, Germany, and others. The TER is just 0.20% per year, extremely low. The fund has over 60 billion euros in assets under management, making it one of the largest ETFs available to European investors. It's available on virtually every European platform, including Trade Republic and Scalable Capital. This is the single most recommended ETF for European beginners, and for good reason. It's simple, diversified, low cost, and has a strong, long-term track record. If you only ever invest in one ETF, this is the one most experts point to. One thing to note, this ETF focuses on developed markets only. It doesn't include emerging markets like China, India, or Brazil. If you want global coverage, including emerging markets, look at our next pick. The second ETF is the Vanguard FTSE All-World UCITS ETF, ticker symbol VWCE for the accumulating version. Unlike the MSCI World, the FTSE All-World covers both developed and emerging markets, giving you exposure to around 3,700 companies across 49 countries. This includes not just the US, Europe, and Japan, but also China, India, Brazil, Taiwan, and more. The TER is 0.22% per year, slightly higher than the iShares MSCI World, but still extremely low. The fund has over 20 billion euros in assets under management. The key advantage here is truly global diversification. You're not just investing in the developed world, you're investing in the entire global economy, including the fastest-growing emerging markets. The choice between IWDA and VWCE is one of the most common beginner questions in European investing communities. Honestly, for a complete beginner, either one is an excellent choice. IWDA is slightly cheaper and more established. VWCE gives broader global coverage. Both are perfectly valid. Pick one, stick with it, and don't overthink it. The third ETF is the iShares Core S&P 500 UCITS ETF, ticker symbol CSPX. This one tracks the S&P 500, the 500 largest companies listed in the United States. Names like Apple, Microsoft, Amazon, Alphabet, Tesla, and Johnson & Johnson. The US stock market has historically been the strongest performing major market in the world, and this ETF gives you clean, direct exposure to it. The TER is just 0.07% per year, and one of the lowest available anywhere. The fund has over 80 billion euros in assets under management, making it one of the largest ETFs in Europe. The main consideration with this ETF is concentration. You're entirely invested in one country, the United States. That's not necessarily bad. The US market has outperformed global indexes over most long-time periods. But it does mean you're more exposed to US-specific risks like political changes, dollar fluctuations, or a US-specific economic downturn. Many experienced investors combine this with a broader global ETF for balance. But as a standalone beginner ETF, it's a perfectly solid choice, especially given its ultra-low fee. The fourth ETF is the Invesco MSCI World UCITS ETF, ticker symbol MXWO. This ETF tracks the same MSCI World Index as our first pick, 500 companies across 23 developed countries, but uses a different structure called synthetic replication. Without getting too technical, this allows it to offer an even lower TER of just 0.12% per year compared to iShares' 0.20%. For most beginners, the difference between 0.12% and 0.20% is small enough not to matter. But over very long time horizons, 30 or 40 years, even 0 to 8% compounded makes a measurable difference. The fund has over 5 billion euros in assets under management. It's available on Trade Republic and Scalable Capital. If you want MSCI World exposure at the absolute lowest possible cost, this is worth considering. So with 4 solid options, how do you actually choose? Here's a simple decision framework. If you want maximum simplicity and the single most popular choice among European beginner investors, go with the iShares Core MSCI World ETF, IWDA. It's the default recommendation for a reason. If you want truly global coverage, including emerging markets, go with the Vanguard FTSE All-World ETF, VWCE. Slightly broader, slightly more expensive, equally excellent. If you want US-focused exposure at the absolute lowest fee, go with the iShares Core S&P 500 ETF, CSPX. Best fee, strongest historical performance, higher concentration risk. If you want MSCI World coverage at the lowest possible cost, go with the Invesco MSCI World ETF, MXWO. Slightly less established, but genuinely excellent value. The most important thing, pick one, Set up a monthly savings plan on Trade Republic or Scalable Capital and stick with it. Don't switch between ETFs constantly. Don't try to time the market. Just invest consistently and let compound interest do the work over time. Those are the 4 best ETFs for European beginner investors in 2026. All 4 are low-cost, broadly diversified, UCITS compliant, and available on major European platforms. Any one of them is a solid foundation for your long-term investment portfolio. If this video helped you make a more informed decision, subscribe to SimpleWealth. We post simple beginner investing content every single week. Drop your questions in the comments, and we'll see you in the next one.